You are likely watching this video because you've recently suffered a significant financial loss in the cryptocurrency or forex markets. No matter who you are, I am here to assist you with the psychological aspects of trading and the specific mindset required to succeed as a day trader. A successful market participant is, above all, highly organized. Therefore, in this video, I'm going to provide you with 5 non-negotiable rules that you must follow to become an elite trader, improve your psychological resilience, and maintain a sense of calm during the heat of battle. Welcome back to the channel, where we discuss everything related to day trading to help you maintain consistent profitability. Now, let's be honest. Most people don't type trading psychology into a search bar unless they've just lost a substantial amount of money. First, let me say that I am genuinely sorry you lost money. However, secondly, let me tell you that I have walked in your shoes. I have done the exact same thing, and I am here to help you fix it. The emotional trap and the snowball effect. Here is what you are likely doing. You enter the markets, you stare at the price action, and you see a sudden surge. Without any technical analysis aside from the fact that the price is skyrocketing, you jump into a trade. You tell yourself you'll just scalp a quick profit and get out as fast as possible. You see a small gain, but you don't take it because you're convinced it will go even higher. Then the market reverses. You panic and tell yourself, no, it will come back to where it was and then I'll take my profit. But the price keeps dropping. It goes down, and you change your tune to, I'll just wait until it hits my break-even point and then I'm out. This is a total emotional disaster, the snowball effect of poor decision-making. You entered on pure emotion, you failed to exit when you were in the green, and you didn't have a stop loss. Ultimately, you blew your account. If this sounds familiar, welcome to the club. You are part of the 95% of traders who lose money, but that's okay because I have a solution. The gambler's mindset versus reality. I want to show you a specific example of how this cycle repeats day after day. Imagine we see a massive green incline. Everything looks perfect. We see a bullish breakout past previous resistance levels, and you jump into a trade. Suddenly the next candle turns red. Because you don't have a solid strategy and your stop loss is too tight, those next 2 red candles knock you out of the market. Then the price starts to consolidate. Suddenly another bullish candle appears, and you think, oh my god, I'm missing it. You buy again with another tight stop loss, and the next 3 candles stop you out once more. This happens over and over until you reach a breaking point where you say, fine, this is the last one, I'm holding this forever. And then the market simply tanks. This is the typical gambler's mindset. The people who actually profit from the markets day after day are those who use a rule-based trading strategy. Rule 1. Adopt a rule-based strategy. What do I mean by a rule-based strategy? It means you have a defined system that you have back-tested and forward-tested extensively. This strategy is the only tool you are allowed to use. For example, if your system is based on the moving average, perhaps you only take short positions when the price is below the 21 SMA and long positions when it is above. You also need multiple points of confluence. For instance, 1. Price is below the 21 SMA. 2. The market shows bearish momentum. And 3. You see a bearish doji or engulfing candle. That makes 3 specific criteria that must be met before you even consider clicking a button. This is what it means to be a rule-based trader. You don't enter because the price looks like it's going somewhere. You enter because your checklist is complete. Write your rules down on a piece of paper. If the market doesn't check every single box, you don't touch the mouse. This removes the emotion and replaces it with a systematic process. Rule 2. Stop trading the noise. Rule number 2 is, do not trade based on mere price movement or noise. As I mentioned, when you trade based on how the candles are flickering, you are falling into the gambler's mindset. The market is designed to tease you. It essentially catches you with a move that looks tempting, only to trap you in a reversal. This is the primary reason the vast majority of traders fail. You must stop reacting to every green or red flash and start responding only to your predefined signals. Rule number 2 is simple. Do not trade on emotion. Rule 3. Rigorous risk management. Rule number 3 is a massive topic that deserves its own focus: proper risk management. This is arguably the most important aspect of day trading. If your rule-based strategy is set up correctly, you should be looking for a specific risk-to-reward ratio, such as 1:4. This means if you risk 1% or 2% of your account on a single trade, your potential reward is 4% to 8%. When you manage risk properly, you can lose 4 trades in a row and still break even if you win just 1. This takes the emotional weight off your shoulders. Think of your brain as a computer program. It should not execute a trade unless all the parameters are met. Never, ever click buy or sell without having a definitive take profit and stop loss already in place. Rule 4, avoid overtrading and complexity. Rule number 4 is to stop overtrading. For many people, especially those who can sit in front of a computer all day, there's a temptation to watch 50 different pairs, a dozen indicators, and every crypto coin at once. This shatters your focus. When you look at too many things simultaneously, errors are inevitable. I've made this mistake myself. I've been analyzing the CAD/USD chart, but when I pulled out my phone to execute the trade on MetaTrader 4, I realized I accidentally placed a trade on GBP/JPY. Don't let this happen to you. Do not overtrade. Don't look at too many indicators or too many pairs. Focus on 2 or 3 assets at most. Simplify your charts. If your screen is covered in lines and indicators, it's too complicated. Rule number 4 is to keep it simple. Rule 5, eliminate revenge. Trading. The most critical rule of all is rule number 5, no revenge trading. Revenge trading is what happens when you lose $2,000 on a trade and you feel an internal rage. You start looking for the next move immediately because you want to win back your money. You feel like the market stole from you. In this state of anger, you throw your rule-based system out the window. You start trading like a maniac to recover your losses as quickly as possible. But when you trade with emotion, you lose again and again. The markets are designed to find people who are emotional and lead them from one trap to another. Instead of losing just a few thousand, you end up losing $10,000 or $20,000 in a single day because you were fighting the market. If you are in a bad mood, if you just had an argument with your spouse, or if you are feeling anxious, stay away from the charts. Turn off your phone, close your laptop, and walk away. Transitioning to a calm mindset. Practicing these rules on a demo account with a rule-based strategy will eventually remove the stress from your trading. I used to be an emotional trader. I would enter a position and start sweating, panicking about where the price was going. Now, when I place a trade, I simply look at my system, enter the position, set my targets, and walk away. I'll go grab a coffee or read a book. I have zero emotion attached to it because I know my strategy is proven over time. It is incredibly refreshing to trade with a calm, relaxed mind instead of being covered in sweat. So just relax. Keep it simple and stick to your rules. If you want to learn specific strategies, I have a wealth of videos on this channel covering scalping and swing trading. Open a demo account and start trading casually. There's no risk on a demo account, which will help you calm your nerves. After a month of consistent practice, you will see that the system works. Only then should you deposit real money and slowly grow your account over time. If you found value in this video, please give it a like, consider subscribing for more content, and I will see you in the next one.